Ready to roll the dice on some buzzy stocks? The stock market is a place where fortunes are made and lost, sometimes in the blink of an eye. Every day, investors around the world are faced with the same question: should I buy, should I hold, or should I pass? Today, we're diving into 3 stocks that have been making waves: RELI, HUSA, and RBNE. Whether you're a seasoned trader or just starting out, understanding the story behind these tickers can help you make smarter decisions. So let's take a closer look at what makes these companies tick, what risks they carry, and whether they might deserve a spot in your portfolio. Let's talk RELI, HUSA, and RBNE. These aren't your typical blue-chip giants. Instead, they're smaller, more volatile, and often overlooked by the mainstream media. But sometimes, it's the underdogs that surprise us the most. Each of these companies operates in a different sector, faces unique challenges, and offers its own brand of opportunity and risk. So what's the real story behind the ticker symbols? Let's break it down one by one. Alright, let's break it down. First up, RELI, Reliance Global Group, insurance and real estate plus a sprinkle of tech. RELI is a company that's trying to do something ambitious: blend the traditional world of insurance and real estate with the fast-moving, ever-evolving world of technology. Imagine a company that's not just selling insurance policies or managing properties, but also building digital platforms to make those processes faster, smarter, and more efficient. That's the vision behind RELI. They're not a household name, at least not yet, but they're working hard to carve out a niche in a crowded market. They're small, but they're hungry. RELI's been pushing into new markets, looking for that digital edge. In the insurance world, technology is changing everything, from how policies are sold, to how claims are processed, to how customers interact with their providers. RELI is betting that by embracing digital tools, they can outmaneuver bigger, slower competitors. They're investing in software, building partnerships, and trying to reach customers who want a more modern, streamlined experience. It's a bold strategy, but it's not without risks. The insurance and real estate industries are both highly regulated, and breaking in as a small player can be tough. But for investors who believe in the power of innovation, RELI's story is one to watch. If they succeed, early investors could win big. But remember, with small caps, volatility is the name of the game. RELI's stock price has seen its share of ups and downs, sometimes swinging wildly in response to news, earnings reports, or even rumors. That's the nature of small cap stocks. They can soar on good news, but they can also tumble just as quickly. For some investors, that volatility is exciting, a chance to make big gains in a short period of time. For others, it's a source of stress and sleepless nights. If you're thinking about investing in RELI, it's important to ask yourself, how much risk are you comfortable with? Are you in it for the long haul, or are you hoping for a quick win? And most importantly, do you believe in the company's vision and leadership? Let's take a moment to reflect. Investing isn't just about numbers on a screen, it's about understanding the people, the products, and the potential behind those numbers. RELI's journey is just beginning, and only time will tell if they can turn their ambitions into reality. Next, HUSA, Houston American Energy, oil and gas vibes, Texas style. HUSA is a company that's all about energy, specifically oil and natural gas exploration and production. Based in Houston, Texas, they're right in the heart of America's energy industry. For decades, oil and gas have powered the world, and companies like HUSA have played a key role in keeping the lights on and the engines running. But the energy landscape is changing, and HUSA is facing both opportunities and challenges as the world shifts toward cleaner, more sustainable sources of power. With energy prices flipping like pancakes, HUSA sometimes rides the highs. The price of oil can be incredibly volatile, swinging up and down in response to global events, supply and demand, and even geopolitical tensions. When prices are high, companies like HUSA can make a lot of money very quickly. But when prices fall, profits can evaporate just as fast. That's why investing in energy stocks is often compared to riding a roller coaster. You never quite know what's around the next bend. But let's be honest, this stock can go on wild roller coaster rides. HUSA's share price has been known to spike on good news like a new oil discovery or a jump in energy prices, only to drop just as quickly when the market turns. For traders who thrive on volatility, HUSA can be an exciting play. But for long-term investors, the constant ups and downs can be nerve-wracking. It's important to remember that the energy sector is influenced by factors far beyond any one company's control. Global politics, environmental regulations, and even the weather can all have an impact. If you like excitement, and maybe a little stress, HUSA is one to watch. But before you jump in, take a close look at the company's financials, its management team, and its track record. Are they making smart investments? Are they prepared for the ups and downs of the market? And most importantly, do they have a plan for the future as the world moves toward renewable energy? These are the questions every investor should ask before buying into an energy stock. The energy sector is in the midst of a transformation. As more countries commit to reducing carbon emissions and investing in renewable energy, traditional oil and gas companies are under pressure to adapt. Some are investing in cleaner technologies, while others are doubling down on fossil fuels. Where does HUSA fit into this picture? That's something every investor needs to consider. Now RBNE, Robin Energy Limited. This one's all about green energy. RBNE is a newer player in the market, but they're making a name for themselves by focusing on renewable energy sources like wind, solar, and battery storage. As the world races to combat climate change, companies like RBNE are at the forefront of a global shift toward cleaner, more sustainable power. They're newer, smaller, and riding the renewable energy trend. RBNE is betting that the future belongs to companies that can deliver clean, affordable energy to homes and businesses around the world. They're investing in cutting-edge technology, building partnerships with governments and other companies, and working to scale up their operations. It's an exciting time to be in the renewable energy space, and RBNE is hoping to ride that wave to success. The upside? Big potential if they deliver. If RBNE can execute on their plans, they could capture a significant share of a rapidly growing market. Investors who get in early could see substantial returns if the company succeeds. But as with any emerging industry, there are risks. The renewable energy sector is highly competitive, and not every company will make it to the top. The risk? They're still proving themselves, and not every green dream turns into gold. RBNE faces stiff competition from larger, more established players, as well as from other startups with similar ambitions. There are also regulatory hurdles, technological challenges, and the ever-present risk that the market could shift in unexpected ways. For investors, the key is to balance optimism with caution, recognizing the potential rewards, but also being realistic about the risks. Investing in high-growth sectors like renewable energy can be thrilling, but it's not for the faint of heart. The potential for big gains comes with the possibility of big losses. That's why it's so important to do your homework, understand the companies you're investing in, and be prepared for the ups and downs. Bottom line, RELI, HUSA, and RBNE are all high-risk, high-reward plays. Each offers a unique opportunity, but also comes with its own set of challenges. Whether you're drawn to the innovation of RELI, the energy swings of HUSA, or the green promise of RBNE, it's crucial to approach these stocks with a clear understanding of what you're getting into. Don't let hype or fear drive your decisions. Focus on the fundamentals and make sure your investments align with your goals and risk tolerance. If you're betting on the future, do your research, diversify, and don't invest more than you can afford to lose. The best investors are those who take the time to learn, who ask tough questions, and who never stop seeking out new information. Diversification is your friend. By spreading your investments across different sectors and companies, you can reduce your risk and increase your chances of long-term success. And remember, no one can predict the future with certainty. The stock market is full of surprises, and even the best-laid plans can go awry. If you're new to investing, start small. Take the time to learn about the companies you're interested in, read their financial statements, and follow the news that affects their industries. There are plenty of resources out there, books, podcasts, online courses, and more, that can help you build your knowledge and confidence. And don't be afraid to ask for help. Whether it's a financial advisor, a mentor, or a community of fellow investors, having a support system can make all the difference. Hit follow for more honest takes. And remember, sometimes the best investment is in your own knowledge. At the end of the day, the stock market is a tool, a way to build wealth, achieve your goals, and participate in the growth of the global economy. But it's also a place where risk and reward go hand in hand. By staying informed, keeping a cool head, and always putting your own financial well-being first, you can navigate the ups and downs with confidence. Thanks for joining me on this deep dive into RELI, HUSA, and RBNE. Until next time, keep learning, keep growing, and remember, the smartest investment you can make is in yourself.